Is that gonna go away?
Why? Can you hear me now?
Yes,
Perfect.
it's all good.
And then let me go ahead and all right, we are now recording. So I'm gonna go ahead and share my screen and get us kicked off. All right, good evening, everybody. Thank you and welcome to the Wealth Mindset and Real Estate Investing virtual meetup. My name is Chris Price. I'm the host of the virtual meetup for Wealth Mindset and Real Estate Investing. And I'm also the CEO and co-founder of Red Fox Multifamily. Before we get to tonight's guest speaker that we have, I want to take a few moments to talk about our sponsors. So, first and foremost, the Wealth Mindset and Real Estate Investing Meetup is open to all who are interested in growing generational wealth through passive real estate investing and increasing their financial intelligence. This meetup is for the busy professionals and retirees across various industries. The individuals in the group make a good living and have discretionary income to invest in real estate for its proven wealth building power, but don't have the time, skill sets, or network to do it at speed and at scale. This meetup focuses on helping all of us grow our wealth mindset by learning how to build and preserve wealth while developing and maintaining an abundance mindset. This meetup will focus on multifamily real estate investing as well as other proven ways to build wealth through real estate through passive investments. And then the other sponsor here is Red Fox Multifamily. Red Fox Multifamily works with investors who are dissatisfied with the low returns from savings accounts and bonds and investors who are concerned about the volatility of the stock market. Red Fox Multifamily puts discerning investors' capital to work for them by investing in exceptional multifamily properties in the best markets nationwide. Demand for multifamily rental units continues to grow and is driven by both preference of certain demographics as well as unfavorable single-family home ownership options. Unaffordable, excuse me. Red Fox Multifamily is based in White Plains, and we partner with investors for whom the stability of real estate investment appeals, but the stress of property ownership does not. We give our investors the benefits of real estate investment through syndication. So thank you for that brief commercial break there. Let me talk a little bit about the logistics. So I'll ask everyone, if you're not speaking, to please put your microphones on mute. If you could hold your questions to the end, unless the speaker invites you to come and speak and ask your questions. We'll also want to make sure that you all know that this presentation is being recorded so that it can be circulated out and posted on our YouTube channel once we are done with this. Please note that this material does not constitute an offer or solicitation to purchase securities. And please note also that this information is only this is information only and should not be construed as business, financial, or legal advice. And then finally, here before I introduce our speaker, if you're interested in talking more, please do reach out to me. My contact information is here on the screen, Chris at Red Fox Multifamily, or you may scan the QR code and have access to my contact information there. It's also in the information that was sent in the email. So in terms of our agenda for today, I'm gonna take a few moments to introduce our speaker for this evening. Our speaker is going to give a presentation. We'll have some time for Q&A and then some virtual networking if time permits. So, without further, let me actually take a brief moment to introduce our guest speaker this evening. So, Our guest speaker is Alina Trigub. And Alina, I must say, before I get into any of the stuff that's on the screen here, I must say is one of the most generous people that I've ever met. In fact, my introduction into real estate investing and from a multifamily standpoint is a lot, very much attributed to Alina and the education that she provided in this very forum. In fact, that where she was hosting meetups in person and virtual throughout the pandemic. And I had a great opportunity to meet with her, to speak with her one-on-one, to invest in some of the projects that she's brought to myself and my wife, and has been just a great resource to help educate us and help us learn about some of the things that you're going to learn about this evening, about how wealthy people go about building and preserving their wealth. And I think you guys are going to be in for a treat this evening. And so, Alina, I have to also let you know this is just about our 1 year anniversary since we started this meetup. And so for me, this is a special moment having you, the person who really gave me a start in this space and to be able to have you here, coming full circle and presenting to the community that's being built here is quite an honor. And I have to say, just thank you. And I have so much gratitude for you and for what you've done for me and my family, and just helping us to learn about this space. And I'm so grateful for everything. So thank you very much for taking the time out this evening. So with that, let me tell you about Alina. Alina Trigub is the founder and the managing partner of SAMO Financial. Alina loves helping people. This is why she's always keen to spread the word about the benefits of passive investing in various forms of real estate. Getting to the heart of the goals of potential investors, she will explore all avenues for improving their portfolios. SAMO Financial's mission is to create win-win partnerships through long-term relationships with our deal sponsors. They custom tailor their wealth building approach for each investor. And as a woman-owned business, they empower women to take charge of generating wealth. And this is just amazing, an opportunity here. So what I'm going to do, Alina, is I'm going to stop presenting, and then you should have the ability to present and get us started here. So please take it away.
Chris, thank you for such a warm introduction, and congratulations on the 1 year anniversary of hosting this webinar. I can't believe that time flies so fast, and nothing gives me more satisfaction than hearing that your family is now much further away from from that point on where you came when we met, and you knew nothing about passive investing in real estate and syndications. And to see the how far along you've come and how far along your family come with building your wealth, it's just incredible. And it's definitely something that I very much enjoy hearing and doing. And that's one of the reasons why I continue doing that, because of that impact, not just to individuals but their families as well. And I know you and Ali support each other very much, so that's always awesome to see that couples working together and teaching their kids too. So kudos to you.
Thank you.
Kudos to you. Okay, let me start by sharing my screen. Okay. Just bear with me. Entire screen window. Okay, I think so this looks slightly different from Zoom. I think I'm doing the right thing, but let's try. So I'm sharing, but I need to put this in a presentation mode.
Your screen.
Are you seeing it in presentation mode now?
Yes, we can see it in presentation mode.
And you see the full screen, right?
Yes.
Okay. Then I share the full screen. So good evening, everyone, and welcome. I will try not to make this presentation too long. In fact, I would love for this to be interactive as possible. I cannot see the Q&A, but I'll let Chris monitor that. So if anyone wants to stop me at some point and ask questions as we go along, by all means, that's totally fine. Or if you prefer to wait till the end, that's fine as well. And like I said, I don't want this to be too long. I intentionally made it slightly shorter so we would have more time for interactions and Q&A later on. So just like Chris did his part, my attorney had also asked me to show this slide to you. As boring as it sounds, we do have to share this, that this is for educational purposes only. We're not selling anything, and you always have to consult with your hired professionals prior to making any decisions about investments or any serious steps that you decide to take in your life. So before we get into the presentation itself, I'd like to share my aha moment and my story that led me to this moment, and it'll give you an idea as to why I'm here and why I'm doing what I'm doing. So for me, this journey started really 30 years ago when my mom and I immigrated to the United States from what used to be then Soviet Union. We both wanted to have a US degree, so we both went to college at the same time, and we had to work a bunch of odd jobs just to survive. So after graduating with degree in accounting, I went into public, never really liking accounting while going through the education, but a friend of mine said, don't worry, once you start making good money, you'll enjoy it. I tried public. I worked for a big four accounting firm. I was big five at my time. I tried private accounting, and that proved that I didn't really care for taxes or accounting. So I left the field altogether and ended up in the information technology field that I very much enjoyed and had 20 plus years of very successful career. I've done many different things, but all of them had one theme in common. I was basically the liaison between the world of business and the world of technology. And while my career was progressing, and my husband's career was progressing, so were tax brackets, and we kept owing more and more to the IRS. And as a former tax accountant, that bothered me. I thought to myself, there must be a way to lower tax implications somehow. And in my research, real estate kept coming up. So I kept thinking that I have to take action. I have to start doing something. So finally, about 8 years ago, I decided I'm going to take action. I'm going to see what can I invest in. So I started looking for small residential multifamily here in New Jersey, where I reside with my family. And being an accountant, the numbers wouldn't seem to work. It was impossible for me to find something where the numbers would work. It was either high taxes or high prices and whatnot. So I decided to start looking out of state. And when I was looking for something out of state, I came across this passive real estate strategy called syndications, where I would be investing money, but someone else would be doing all the work. And it sounded very enticing. After doing the additional research, I finally pulled the trigger, even though it was very stressful, because if you come to think of it, I was investing out of state in a property that I've never seen myself in person, with a person whom I've never met in real life, only spoke on the phone. And for me, it was a large sum of money. It still was $50,000. So finally, when I pulled the trigger, the snowball effect happened. After that, I invested in the second, third, fourth, and so forth, and many more syndications. And it's seemed to be going well. And I've had many exits in the last 3 to 5 years, and I've done really well for myself. But while I was going through this journey, I was working my W-2 job, and a lot of my friends are working on Wall Street because I have a financial background, so we all came with that accounting degree. And when I was mentioning what I was investing in, most people seemed not to know what it was, and it puzzled me as to how come nobody ever heard of syndication. So I wanted to change that. I wanted to make an impact on the people in my community, in my surrounding. So with that in mind, I started SAMO Financial with the goal of helping other people to follow in my footsteps and building wealth by diversifying their portfolios outside of Wall Street into something that's completely decoupled from the stock market. And not only it provides passive income, but it also has tremendous tax benefits. And in some cases, you are also making an impact in the communities when you, for instance, buying a large apartment complex in a working class neighborhood where there's a very high demand for housing, and you can offer housing at a discounted prices to people that just cannot afford paying high prices. So that was huge portion of my reasoning as well. And so I started sharing that through SAMO, and gradually build up my business while still working. And while I was working and while I was growing my portfolio, growing in my education and my understanding of real estate investing, I came across the Purple Book, which many of you probably have seen or have heard about or maybe read. And once I read it, it was like a eureka moment. Wow, you can have passive income, which I was already generating through these investments, and not even have to work for it. And then when I came across the teen version, I decided to make my kids read it. And you see the kids, my family's picture on the screen, and my kids are slightly older here. So they were younger when they read the book, and they made nothing of it. They didn't want to talk about it. They just read it because I asked them to. But then later, a few years ago, I was riding in a car with my son and had one investor on speakerphone. And after we finished talking, my son, who was 11 at the time, turns to me and he goes, "Mom, you were talking about assets with this person." And I looked at him puzzled. I'm like, "How do you know?" I mean, to hear the word asset from an 11-year-old, that was a little bit surprising for me. And he said, "Well, you made us read that Purple Book, remember?" So that's when my face lit up, and I was really happy to hear that some of the lessons learned from Robert Kiyosaki book did sink in, and my son remembered it. So that was a huge moment for me as well. So when pandemic started, I got a pink slip, just like many folks at that time, from my cushy IT job. But guess what? Because I've built up this passive stream of income through the investments and was building my company on the side, that didn't bother me. And at that point, I decided not to look for another job. I actually ended up consulting for a private equity firm as the head of investor relations for a few years, which was also an amazing experience. And I learned a ton about fund of funds, investing in funds, and how private equity firms work. But essentially that pink slip opened up completely different world of entrepreneurship for me. And I'm grateful that it happened, because the job was too cushy and I would not have done it on my own. So that's how it happened for me, essentially. We will talk about additional lessons learned from that experience in a little while, but let me just tell you a little bit about SAMO Financial and what it has evolved into at this point. SAMO Financial is part of a large network of like-minded investment companies. We allow folks to join us on a larger project and invest together with us. We invest in a variety of commercial real estate projects such as flex space, medical offices, retail, and so forth. We also provide extensive passive investor education, and as Chris kindly mentioned, it's benefiting a lot of folks, just like it benefited Ali and him, and I'm really happy to hear about that. We also started doing one-on-one coaching recently for any investors that want to expedite their journey and become more sophisticated in their passive investor process in general. At this point, the portfolio includes not only a mix of commercial and residential real estate, but also investments, other alternative investments as well. So we've expanded it for us and our audience as well. So people typically want to achieve financial freedom, some sooner, some want to achieve it later. And many folks realize that you cannot do it by simply investing in the stock market. Excuse me. And that's one of the main reasons why people choose to work with companies like Chris's company, Red Fox, or like us, SAMO Financial, because that helps them to reach their financial freedom point much sooner. But essentially, the way to think about it is you're the chief executive officer of your own life, your own financial freedom, and you are responsible for generating that additional passive income for you and your loved ones. And the sooner you take charge of that, the sooner you'll be able to add additional streams of income to your portfolio, and the sooner you will be able to achieve that freedom number that will allow you to either leave your full-time job and maybe switch to the world of entrepreneurship, or start working part-time, or switch to maybe a job that you enjoy doing but that doesn't pay as much. People have different goals and priorities, and it's essentially it comes down to finding something where you're living based on your life purpose and you're enjoying your life rather than working to just generate that paycheck. And that's the point that you want to reach in life. So let us talk a little bit about different investor types. There are two investor types. There are active investors and there are passive investors. And active investor is someone who is actively involved in real estate because, believe it or not, real estate is just another business. So you can be an active investor, but know that you're engaging into starting a new business. Or you can be a passive investor, someone who just wants to limit themselves to putting their funds with somebody else and letting somebody else do the work. So let's unpack that further. So how do you actually decide whether you want to be active investor or passive investor? As I mentioned, active investing is like running a business. So when you're running a business, it takes a lot of your time and sweat, and you need to understand how much time you actually can contribute to this new endeavor. So the truth of the matter is that your business will require a lot from you. You'll have to change your lifestyle, and your availability will be at the premium. Luckily, unlike just about anything else related to running a business, figuring out your availability is relatively easy. For example, if you know that you work either full-time or part-time, and you know whether you work on the weekends or during the week, you know how much free time you have. So the first step is essentially figuring out what is your availability. But on top of it, once you figure out your availability, you need to understand how much of that available time you want to spend on a business, because right now you're probably spending that time either on your family, your hobbies, or other day-to-day activities that you enjoy doing. When you start another business, or when you start a new business in addition to either your current business or your W-2 career, you will need to devote time to this new business. And depending on your commitment level and your bandwidth, it may take a lot of time, and you will be also doing it at a pace that will be adjusted to your own schedule. But again, it's on you to understand whether this is something you want to take on and do it. And that may mean giving up some of the activities that you're doing now. For me, for example, it was easy. I gave up TV. Like, I used to watch TV, and I decided to give it up. I barely watch it now. But all of that time that I was spending watching TV went into starting and running this business, which I really enjoyed. It was difficult. It had a lot of challenges, and the challenges, please understand, the challenges don't disappear. They just change. You get new challenges as your business grows. But if you enjoy doing something, regardless whether it's real estate or something else, you will be able to overcome these challenges, because again, like in my case, it's given me tremendous satisfaction see happy clients and see the results of my venture, and that helps a lot to overcoming day-to-day challenges. So again, you start with determining how much free time you have, and then once you know your bandwidth, you determine how much of that free time you're able to put into running a new business. And that will help you to create a schedule that you can use to run this business. Another way to think about this is think about potentially, like if we use a simple example, let's say you decide that you want to start your own real estate business and you want to buy a single family house and place a tenant. So think about how much that house costs, and how much will expenses be, and what kind of income you will be able to generate, and then compare that amount to potentially putting the same amount into passive real estate investment that already by default includes the expenses, and see what kind of income you're generating with that. Keep in mind that in addition to the financial component, there is the time component. How much time are you spending on one versus the other? So keep the time value of money component in mind when comparing the active real estate investing and passive real estate investing. And of course, there are many other types of active real estate investing businesses, from buying and holding houses to flipping, wholesaling, and so forth. But again, it all comes down to not comparing just the financial piece, because in a lot of cases it'll probably be higher for active income, but again, there's also a money trading component. So put the two together and compare it against passive prior to deciding what will work better for you in your particular situation. And if you have a family, then for you and your family. And definitely take into consideration your family members, because if you're starting a business, it will impact them as well, directly or indirectly, because you will be spending less time with them, because you'll need a lot more time on building your business. So that's very, very critical to keep in mind.
Yeah, Alina, there's so much of what you said on these slides that just have resonated with me for sure, especially, those trade-offs, right, of those decisions that you have to make when you're starting your own business and deciding to, to launch this in the right way. How you spend your time afterwards is so critically important. And and when things, doing that time assessment that you talked about, how much time am I really watching TV or doing things that are not productive, and doing that assessment and redirecting that time towards things that are more productive have been very much rewarding in that regard. And I don't miss the trade-offs of what I've left behind in terms of those things. But that's not for everyone, as you're mentioning. I think it's so important, that you're reinforcing these facts. And just on, and then one last thing, just on the previous slide, I remember the facts that having your kids read, get educated on that book. When you were talking about it, it reminded me, we did something similar after a conversation that you and I had. In fact, one time we bought the Cash Flow for Kids board game, and my kids, who were younger at the time, started playing that game, and at a young age, to your point, started learning what assets and liabilities were. And I thought to myself, that's the power of that game. So I didn't mean to interject, but I just wanted to share that just to add context to what you're saying as well.
Absolutely, Chris, and I love that. I'm so happy to hear that you bought that game and you enjoyed it with your family. It's, it essentially kills several birds at once, because first of all, you spending time with the family, you're bonding. Second of all, you're all learning together, and kids learn a lot faster from the game than from the school, because game is fun, right? Game is an equivalent of fun. School, when the kids go to school, they think of serious stuff. So plus they realize that you as parents are learning with them. You need to learn the rules of the game, and you need to all abide by these rules and play this game together and learn essentially at the same time. So it has huge benefits. So kudos to you and your family for playing Cash Flow 101. So glad to hear you guys enjoying. Very nice. So when someone decides to buy a large commercial property, it requires a lot of money for down payment, closing costs, and so forth. One of the ways to solve this problem of covering this large amount of money is to pull the group of investors together and purchase it as a group. So this pool of people that puts the money together is called syndication, and typically this group buys investments through the legal structure of partnership. The reason it's called syndication is because it's done through the world of securities that is regulated by SEC, Security and Exchange Commission. And all that syndication entails is that it involves two groups. One of them is active, which is called GPO, general partners. The other one is passive, which are LPs or limited partners. So whenever you have limited partners in a structure, that typically is done through a syndication. And the reason you see pilots on the screen and passengers is simply because I like comparing syndication to an airplane, where pilots are usually the GPs and the passengers are LPs. As passengers, limited partners essentially give pilots or general partners full authority to take on the plane and bring them from one destination to another. And pilots have full authority over the plane. They decide which route to take, what's the best route, how to avoid clouds, bad weather, and so forth. And they're deciding on the path. That path could be this much in length, but if they need to shorten it or increase that length of a path, it's in the pilot's hands to do it. In a similar fashion, general partners are offering, in the offering memorandum, provide investors with projections as to what they believe the property can generate. They provide the expected returns, expected timeline, and so forth. But then it's up to them to decide at what point to refinance or sell it. And they may or may not go by their projections. A lot depends on how the market performs, how the area performs. And the ultimate goal is always to sell the property at a gain, to make sure that everyone in the group benefits from this investment. So very similar to the flying pilots and the airplane. And if we will continue with that airplane theme, while the pilots are the GPs, nothing can be achieved without the whole team, and the team is not just the team that's on the plane, but also folks that are working at the airport, fixing, supporting the plane, and then helping to land the plane. All of them are the essential part of making sure that the passengers are delivered from one destination to the other. And in a similar fashion, syndications typically comprised of a lot of team members, and the folks, the roles that you see on the screen are some of the main roles, but they are not the only ones. I assure you, there are many more people. But the syndication would not be possible without equity investors that are also called limited partners or passive investors. You also always need securities attorney, you need property manager, appraiser, insurance agent, and then once the property is purchased, someone needs to manage the assets. So you always need asset manager, property managers that manage the property as well, and so forth. And there are so many roles beyond these that are not even mentioned here, but all of them are part of this essential team that makes sure that the passengers are delivered from one destination to another. And in the case of syndications, they ensure that the syndication is successful when you have all the right team members on your plane. So here's another way to show the benefits of the commercial real estate investing and the main reason why the wealthy people choose this way of investing. As you can see, real estate has a lot of benefits that are not available on the stock market. Things like forced appreciation. And for those that may not be familiar with forced appreciation is something that can be achieved in one of three ways. You can achieve it in the commercial real estate by either increasing income or decreasing expenses, or doing both at the same time. So essentially what happens is you increase the bottom line, which is NOI, net operating income of your property, and that indirectly forces the value of your property to go up, and that's why it's called forced appreciation. Some of the examples of that could be maybe replacing roofs or renovating the units. That will improve the income of the property and essentially increase the value of the property. One of the things that the stock market or the stocks have is that built-in equity, but other than that, you can't use financing to buy stock or bonds. And then, nothing beats physical asset. And I know there are folks that invest in crypto, and by all means, it's free world, people can invest. My personal preference is tangible asset. I like to feel and see the property or the asset I'm investing in, and that's one of the main reasons why I love real estate. And then the tax advantages, that this is one of the main reasons why I decided to start investing personally, and why many of my clients decided to start investing. As someone who was highly compensated employee, I remember seeing the AMT, alternative minimum tax, on my tax return, and always have to pay the high taxes. When you have a real estate investment, even though you're passive, you're still eligible for the tax advantages through depreciation, and then the cost segregation studies that are done on your property to increase the tax advantages that you may receive by investing passively in real estate. And if folks want to hear more about this, or if we want to talk after the presentation, more than happy to talk a little bit more about depreciation, cost segregation. I realize these are probably not the terms that everyone is well familiar with. So as with any investments, real estate investing has its risk. However, in a commercial real estate, these risks are easier to mitigate. For example, when you're investing passively in a syndication, the property is usually owned by the LLC, limited liability company. The investors are passive. They joined as limited partners, which entails that they are not personally liable for anything in a syndication. And while some people choose to still create their own LLC to invest, they don't have to, because again, they are covered by the umbrella of the LLC that owns the property. The loans are typically non-recourse, and even if they were recourse, again, the name on the loans are typically the names of the general partners, not the limited partners. And then, as I mentioned, the investors make no personal guarantees on the investment whatsoever. And even if you're still on the fence after listening to me, you may want to pay attention to this guy. He's one of my favorite mentors, and probably one of the best, along with Charlie Munger, his partner, value investors of all times. I highly value Warren Buffett's opinion, his work, and follow his work a lot. One more small fact about the risks. By creating multiple streams of income, you're essentially protecting your family's future. Because again, God forbid, a few years back when I lost my W-2 job, if I didn't have all these passive streams of income, I would have been scrambling along with thousands and millions of other people that lost their jobs and trying to find another. But because I started creating these passive streams of income earlier, our family was ready for that situation, and I didn't have to look for another job. So start now, don't wait long, and start by creating additional streams of income. Because essentially the goal for you is to minimize the risks to your family and make sure that you're not relying on that W-2 job alone. You have other streams of income that will support your family if, God forbid, something happens. So this basically concludes my presentation. Thank you so much for listening. If anyone is interested, on my website, I have a portfolio management 101 report. It's absolutely free, so feel free to go to the website and download it. Or if anyone wants to reach out, this is my information. You can schedule time if you want to talk to me. And I'm ready to open up the floor for questions. Thank you.
Oh, Alina, awesome job. Great content. We will absolutely circulate your contact information as well as this recording to everyone so that they can have the opportunity to reach out to you and learn more about this asset class and how people can get involved and get invested to really, to your point, diversify your income. I have to just say, that was, for me, it was really, a few key things. A lot of what you spoke about resonated with me. The tax situation is something that resonated with me, with my wife and I as high income earners, for our two respective corporate careers. Wanting to find ways to mitigate our taxes legally was something that was really important to us. And then, of course, being able to build up those passive income streams. And I remember we were having conversations about how do we do it? At one point in time, we were very much focused on building out a portfolio of single family rentals throughout strategic markets. And when we looked at the number of how many single family rentals we would need to acquire in order to accomplish that financial freedom number that you talked about earlier, it was a daunting task. And so we said there has to be a different way. And then lo and behold, that's when I came across you and what you were doing, and with the meetup at the time, and now the community that you've built, and all the education and information, and it's sort of my gateway. And I was one of those people that was on the fence at one point in time, just totally thinking about being the passenger on the plane. But then I really caught the bug, and I couldn't stop reading the books. I couldn't stop listening to the podcasts, many of which I listened where you were on them. I couldn't, put down all of the different things that were going on, and realized that my interest in this was a bit more than just the person who wants to be a passive investor and really had a passion for this and wanted to really add value not only for myself but to others as well. So you hit on so many great things, and I just I'm so grateful. I want to open up the floor to the colleagues on the line here. If you have a question, please do take yourself off mute and ask Alina your question. If you prefer to type it in the chat and for me to read it, you can just simply click on the chat button and type it in, and I'll go ahead and read it out so that she can address it here live.
So I was curious. One thing I've always been interested in some real estate investment, and I was curious what the difference that a limited investor is for property real estate, commercial real estate, I should say.
Nick, thank you for your question. So essentially, if you're deciding to invest passively, and I don't mean you, I mean in general, when you invest passively, the structure of the investment has to be a syndication. That's according to the SEC guidelines. If, however, the property is purchased by everyone who is active and going to be actively engaged in the process, then all of the investors are considered active investors. Does that answer your question?
Okay, so the limited investor is on the passive side and the active.
Correct. Limited partner is a passive investor, essentially. Those terms are used interchangeably, yes.
Okay, thank you.
Sure. Good question. What other questions do folks have?
Yes, don't be shy. I definitely have some questions for you, in a moment, but I want to give the team a minute to come off mute and ask their questions.
Of course.
I won't force it. If people don't have questions, then I'll jump into some of the questions that I have, Alina. And in fact, these questions are questions that we ask, all of our guest speakers that come on to this program to sort of put them on the hot seat a little bit. And I wanted to take the opportunity to ask you some of these questions as well.
Go for
And
it.
one of the things that I love to ask folks is, about travel. I'm a big traveler. In fact, my family and I, we have some exciting travel plans this summer to get around and just continue to see the world and take things in. We don't need more stuff. We want to have those experiences that we can take with us for a lifetime, right? And so, with that in mind, what is one of the best trips that you have ever taken, and why?
For me, it was probably our last year trip. We went to Yellowstone. The main reason, and please don't laugh, the main reason why I enjoyed it so much is because I knew that there would be dead spots where there would be no antenna and my kids would not be on the phone and we would get all the time. I said, don't laugh. Well, besides that, I mean, the views were absolutely breathtaking. I love that, I like, the relaxation and the active piece put together, and we had both. And it was absolutely gorgeous, to see what Mother Nature has created. It was absolutely incredible. So very much enjoyed it. And of course, having everyone's attention without the device in the hand was also helpful.
Oh, that sounds amazing, and I want some tips from you on that one because you know, this country has so many beautiful things. So the topography is amazing, and everyone's always like, oh, you got to go here in Europe, or you got to go there in Asia or Africa, or whatever. And I do want to do all those things, but there's so much to see in this country that to take that in, I think is something that's really important. So I will definitely be reaching out to you when we make our trip to Yellowstone. So thank you for sharing that. The next question that I wanted to hop into is, one about just, you have a lot of things going on here. What are some of those hot things that you're working on these days that you want to share with the community out here and the listeners that are going to be listening back on the recording?
Sure. So after I stopped consulting for the private equity firm, this was the decision I made when I decided that I want to concentrate on buying my own commercial properties. So my main focus right now is on underwriting properties. My partner and I are looking primarily in the North Carolinas for the commercial assets. And I still do a little bit of one-on-one coaching for the folks that want to spearhead their real estate investing. I also do a lot of other things, like I volunteer a lot at the local community. I also offer business coaching through one of the local colleges here in New Jersey, Montclair University, if anyone's familiar. But essentially, now that I became an entrepreneur, it allows me to lead life on my own terms and live it in a way that I know is impactful while I am doing what I want to do. Despite the fact that it's very hard, believe me, it's very hard to find a property that you want to put an offer on with the financing terms so different from what it used to be last year, and with the prices not coming down a lot, it's challenging to stay true to the court, to be patient. But the reason we're able to go through it is because, again, we enjoy it so much. Just like Chris, you were talking about how you got involved in this real estate and how you started your own company, Red Fox Multifamily, because you felt so passionate about this. Because I'm very passionate about commercial real estate and impacting other people, that helps me a lot to get through the day-to-day challenges.
Awesome. That you said some really key things there. One of the things that you talked about is, living life on your own terms and, having control of things. And that kind of leads me to the next question about financial freedom. And you even had it within your deck. And I remember, and I know the name of your of the community that you have is, passive, passive income, and creating that financial freedom for folks. Can you talk a little bit about what financial freedom means to you a little bit more? And because when I first heard this term, I'll just add a little bit to this. It was, to me, I was like, financial freedom, like it came out of nowhere, and but as you get more and more into this space of real estate or alternative investments in particular, you start to learn more and more about this, and your mind starts to shift from, I'm going to try and work my W-2 job, and I'm going to throw money in my 401k and hope for the best in the end, to then reshifting and thinking about, I'm going to invest in real assets that provide me with passive income, so that I can then do things like living life on my own terms, like you mentioned. So would you share with the group a little bit more about what you feel financial freedom means to you?
Sure, Chris, that's an excellent question. So I come from a family that didn't have much to live on. My mom raised me by herself. My parents got divorced when I was little, and then my grandparents passed away. So my mom was working two jobs essentially to support us, because it was very challenging to do it on one salary in the Soviet Union. And when we came here, my mom and I had to start from nothing. So I was used to living below our means for a very long time and just living on what we had. So as my career and my husband's career were progressing later in life, when we were able to afford finer things, I never felt, and still I don't feel the need to have something just because I can afford it. It's just my personality. What's more rewarding for me is to see the smiles on faces of my customers and clients, and to see that if I were to use the words of my favorite investor, Warren Buffett, which these words are actually on my business card, someone is sitting in the shade today because someone else planted a tree a long time ago. That's how I feel. That resonates with me a lot. And we can talk in big words about leaving a legacy. For me, it's just being able to not only provide for future generations, but to show them that they can impact their communities, people around them. The impact doesn't have to be to billions of people. Just do good by your town, people in your area, help them, and the rewards will be exponential, because you'll put a smile on your neighbor's face, and nothing can be better to that. That's how I see leading the life now, and essentially I'm living the life on my terms now, which I didn't have before when I was bound to that W-2 job. And while it wasn't, my IT job wasn't as bad as accounting, and I even enjoyed that IT work, but when I discovered the world of real estate investing, I thought this is it. This was my passion, and I still believe that this is my passion, and I'm really grateful that I've discovered it. So that's it. And I
That's
think
amazing.
I think we have a question from the audience. I see
Yes.
Ruth
Yes.
posted a question. So Ruth, in terms of what percentage of the down payment of a property, a lot depends whether it's residential or commercial property. For residential property, the down payment can range anywhere from 5 to 20%. And I know lately the banks have been offering a much more beneficial terms, because they want to attract more people into buying residential real estate. In terms of the commercial real estate, again, because of the changes in the financing and the lending industry in general, the down payments usually range from anywhere from 20 to 35%. I hope that answers your question. If not, then feel free to post another one or unmute yourself if you'd like to ask a follow-up.
Yes, great question. It's another question coming in. I'll ask my last one after that, after the questions come in.
Sure. Yeah, no, I'm glad we're getting engagement from the folks.
Yes.
So I was gonna type it. I think I was the one typing, but I think it'd be easier to just ask. I missed earlier when you mentioned, how did you get your foot into the door, and begin your journey in real estate investing?
So Nick, thank you for asking that. I started as a passive investor, essentially. I started investing passively, sort of similar to what Chris has been mentioning about his journey. And then gradually I took on a more active role in general. And over time, as I learned more and more, I realized that I want to be active and buy my own properties. And that's where I'm at right now in terms of the commercial real estate. But what you need to understand is how much time you have and how much of that time you want to devote towards this venture, and that will help you to figure out whether you want to be active or passive. And then once you decide, the next step would be deciding what do you want to invest in. Some folks want to stick to single family houses, the residential, which is fine. Some want to invest in the commercial, and then within commercial there are so many assets: multifamily, storage, retail, medical space, industrial, and so forth. So then essentially once you figure out the type of investor you want to be, the next step figuring out what do you want to invest in, whether it's passively or actively. Does that answer your question, Nick?
Yes. I was curious as to if you had any resources or recommendations for how to begin that passive investment for personal real estate investments, or even commercial.
So in terms of passive real estate investing, there are tons of books. I'm happy to share the link to my library. Chris, I can pass it to you later, or you can grab it from my website if you'd like. A lot of books that you can read on. If you would like something shorter, I have a lot of articles on my website, which is SAMO Financial, the site that I typed earlier. I also have a bunch of short animated clips that kind of give you an definition of a lot of terms used in passive real estate investing. And then there are a lot of articles. You can just Google it as well. But essentially reading articles, watching YouTube videos, reading books, listening to podcasts, going on webinars like this, and listening to more presenters. I'm sure Chris has brought a lot of other presenters that talk about this topic and other topics, and just asking questions. After you read something, ask questions. Chris has learned a ton over the last several years, so he's a great resource as well to answer any questions that you may have about passive real estate investing. And feel free to reach out to me as well if you'd like.
Absolutely. Nick, I would just add one other thing. Well, Lena's exactly right. And you are doing it, man. You're here, you've invested some time for your self-education. The one thing that I always encourage people to do is to follow up. Alina's she shared her information. I'm gonna circulate her information. Reach out to her. Go onto her website, set up time, learn a little bit more, continue to come to these types of meetup events and learn other things to continue to expand your knowledge about this. Get connected with different operators that are doing this so that you can build your relationships. These are all very important things for you to do. But great question. We have another one that has come into the chat from someone. And this is about wouldn't a lot of money be needed for that? And Bob, if I'm not mistaken, I believe you mean a lot of money with respect to investing in a property or for investing in your education. Could you just clarify quickly for us?
Good point, Chris.
On both counts. So investing in properties and investing in your education.
So good question, Bob. In terms of education, you're paying the money to expedite your journey, essentially. So if you want to pay to a coach, or if you want to pay for a mastermind, that will be hyper expensive, like you said. But if you want to do it at a slower pace, at a pace that's more comfortable to you, again, tons of books. I'm happy to share my library. It consists of like half real estate books and half personal development books. You can learn a lot from books. It's going to be a lot slower, but it will be definitely much less expensive, especially if you are part of a library, or if you use Audible, if you listen to books. So you can learn a lot from the books as well. In terms of investments, investing in syndications, so if you are investing with the sponsors that are not advertising on the so-called crowdfunding platforms, the investments typically start at about 50,000 and go up. If you are a member of crowdfunding platform, or if you want to join one or several crowdfunding platforms, you can invest in Reg A, Regulation A, that allows you to invest as little as, I think, 1,000 or 5,000. So you actually don't have to have a lot. And for Reg A's, I think you may not even have to be accredited investor. And again, if you don't know what it is, feel free to ask. I'll explain. So no, you don't need a lot of money for one or the other. It buys you time and it expedites your journey, but you can do it with a little bit of time and a little bit of money, just at a slower pace. Does this help, Bob?
Can you please elaborate on the crowdfunding and like that platform A you just mentioned?
Sure, Nick. So crowdfunding platform is a platform. It's like a marketplace for passive investments. If you just Google crowdfunding platforms, you'll see a lot. The names don't come to mind right now, but there are so many of them right now. You join for free. You don't need to do anything, and then they show you investments. Some of them require you to be accredited, some don't require you to be accredited, and you depending on the eligibility criteria, you'll see all or you'll see some of the offerings on these platforms, and then you'll be able to pick and choose what to invest in, and it'll depend on the returns that you want to see, as well as the minimum investment that they require. Okay, when that's correct, bond counts, real estate, got it right, crowdfunding platform, how to be successful in that. Bob, good question. How to be successful, same way how you'd be successful offline in these syndications, by learning and educating yourself either on your own or through the masterminds or personal coaching. It's one or the other or both, but continue to educate yourself. The more you know, the more you learn, the more you're able to understand, and the better decisions you make. In addition to books, you can listen to podcasts, you can review the offering memorandums, private placement memorandums, and remember, you can ask questions without investing. You can ask sponsors questions without deciding to invest. You will learn by asking questions and getting answers, and after some time you'll get a handle on it, and then you'll be able to make a better decisions based on the questions and the answers that you receive. Do you have information on your website about choosing the right property, maximizing return? Ruth, when you say choosing the right property, do you mean passive investment or active investment? Because my website is all about passive investing. Passive. I have a lot of articles. I would suggest you go through them, because I'll let you in a little secret. So first I was creating articles based on what I thought would be a good topic. And then later I realized that I'm getting so many questions. Why don't I just answer questions by creating articles? And for the last several years, all of the articles, 100% of them, came from the questions that I was getting from my audience. So I would say that at least 90% of the questions that I get are all covered through those articles. So if you go to the blog point of my website, and if you haven't captured, Chris, would you please share my website? You'll be able to see the articles and search through them as well. So if you have a keyword that you want to search, and just search it. And if you don't get the answer, just feel free to reach out, Ruth, and I'll write a new article based on the question that hasn't been answered yet.
Absolutely, and to add on to what Alina's saying, I think one of the things that I learned about in this process is, you want to certainly be, when you are considering investing, invest with people who you know, like, and trust. I think that's something that you will commonly hear in this space. But beyond that, doing your due diligence, getting to know the operators that you're going to invest with, attending their meetings, connecting with them a little bit more personally. All of those things are valuable, and I can say that I've done all of those things. And then when it comes to the asset, what you are doing a lot of time, and you'll get more of this information when you dig deeper into Alina's content. It is really very much about focusing on the idea of leveraging that operator's expertise in that market. They know the market. They know where the good areas are. They know what the comparable assets are charging for rent, for example, and how much they believe they can get. They know the property management. And there's so many different things that make up a good investment. But what you need to realize is that if you have a hunch, for example, on a good market that you think is good, and then you're the investor that you are choosing to partner with, it focuses there, leverage their expertise and knowledge of the market. That's what you're really investing in when you tap into these syndications, and they help you do it at scale. So It's a great question. Continue to do the deep dive and educate yourself. That's what's going to make this less scary and more of an opportunity that will open be a gateway for you as well.
Yeah, no, it's amazing that we're getting these questions and picking up the curiosity of the folks in your group, Chris. So that's good that people are engaged and they want to learn
Yes.
and they want to grow. So that's good.
Very much so. Well, I realize that we're getting later, and I have one more question for you to allow you to get going, as well as the guest that we have here. And that question is the name of this insight, and then Bob, I'll go to Bob's question, then I'll ask my question. So, any insights and practical tips, if you have any more, sweat equity than financial resources for passive investing?
Um, yes. So find the way to bring value to the sponsor in a way that you would be financially rewarded for your work. So it could be finding a property or managing a property or become excellent at underwriting and offer your underwriting services. You can do that. Or if you have pure financial resources, you still want to invest passively, again, I suggest crowdfunding platforms because you can invest as little as 1,000 in these alternative investments, and it's right there for you. And they're supposed to show the sponsor's track record. They're supposed to show you all of the details, not just the marketing materials, but also the legal document called private placement memorandum. And just start talking to these operators, asking questions. That also speeds up your knowledge, your learning curve in general when you talk to people in the business and ask them questions and hear how they respond and what they respond with. Does this help at all, Bob?
Yes, all right. Bob,
Awesome.
thank you everyone for your engagement. Okay, last question that I have for you, Alina, and that is, as you know, the name of this meetup is Wealth Mindset and Real Estate Investing. And I like to ask the guest on our meetup, what does having a wealth mindset mean to you?
To me, it means to think of everything as abundance. We live in a society where there's abundance of many things and many things that are very simple that we don't realize. We have abundance of sunshine. We have abundance of fresh air. Well, at least sometimes when we don't get the Canadian fires coming our way. We have abundance of jobs. And mind you, I know a lot of larger companies are laying off people, but smaller business owners are still in need of finding people. And I have a lot of small business owners as my clients, and a lot of them complain how hard it has been, especially since pandemic started and on until this time, to find the employees. So there's a huge demand for jobs. So if you look at everything from an abundance versus fixed mindset, then the world looks like a much better place, and it helps you to move forward and look at things from a different perspective, and it helps you to build wealth faster because you just look at things from a positive angle versus the negative one.
Excellent. Well, with that, I'm going to let that be the last words for this evening. This was absolutely incredible. So grateful to you, Alina, for your time and your energy that you gave to the presentation today, and taking on all the questions from everyone as well. And for your generosity, and for people to be able to reach out to you, go to your website, learn and connect with you to learn more. one more time for the guest here, if they want to get a hold of you or go onto your website, where can they reach you? And of course, I will circulate all of this information out to all of the guests who did not, who were not able to join us live today. This will be circulated out to the entire membership, which is almost at 1,000 people right now. And we will also make sure that we post this on our YouTube channel for people to go back and watch the recording as well. So please tell everyone how they can reach out to you.
Sure, and thank you, folks, for amazing questions. Thank you, Chris, for inviting me here. Folks can find me by either typing my name, alinatrigub.com, or typing my company name, SAMO Financial. I'm also on social media, LinkedIn, Facebook, YouTube. I have a YouTube channel, Instagram, and so forth. So I think it's pretty easy to find me in general if anyone is looking to connect and speak further. Thank you.
Awesome. Well, thank you very much, everyone. And with that, I will wrap it up and wish everyone a great evening. Have a great rest of June, and we'll see you at the next meetup.
Thank you,
Take
Chris.
care.
Bye,
Bye-bye.
everyone.